Hey everybody, this is Halstead and Andrew McMillan with REH CPAs. Today we want to talk about tax brackets. I know, really exciting, right? But anyways, so every year the IRS adjusts the tax brackets based on inflation. And usually we see 2 to 3% increase on the tax brackets. But this year, due to inflation being the highest it's been in like 40 years, we're seeing significant increases in the widening of the tax brackets, and that really will help you at the end of the day. I have Andrew McMillan here with me. Andrew, can you go over a little bit how this adjustment of the tax brackets will potentially help our clients?
Yeah, sure. So first you have to understand how the tax system works here in America. So it's a graduated tax system. So what that means is there are different tax rates. So the amount of money that you make, it is going to be dropped into different buckets of tax rates. So for example, if you make $100,000, the first, say, $10,000 of that income is taxed at 10%. The next $40,000 of your income now is taxed at 12%. And then the remaining $50,000 might be taxed at, like, say, 20%. So it's a graduated system. So the more money you earn, that amount of money into these higher tax brackets is that there's only a small portion of that is actually taxed at these higher rates. So, in theory, it's supposed to keep the rich paying more, or the higher income earners paying more on that upper income, and kind of tries to level the playing field here. So right. It's a graduated tax system.
Right. We always deal with that misconception that if somebody crosses over to a new tax bracket, then all their income is taxed at that level. It's like some people don't want to make more money because they don't want to go into another tax bracket. It doesn't really work that way. It's just that bit that goes into the next tax bracket that gets taxed.
It's a feel-good conversation when I'm talking to a client. It's like Christmas when I tell them that just because you make an extra $5,000 doesn't mean all your income's taxed at 25% now. Yeah. It's just that portion. Right. So you got to understand the tax bracket. So what the IRS has done now is they have made those buckets that I'm talking about bigger. So more of your income can now get pushed down into lower rates, lower tax rates, be taxed at a lower rate, which is really going to put money back in your pocket. So this pretty significant increase that they've done to these tax brackets, we feel, is really going to be seen in your paycheck next year. Like, you're really going to see some more take-home pay through the year, because that W-2 wage isn't going to have as much federal withholdings on it as it might have used to.
Now, anytime the IRS does this and they start messing around with numbers, we always see the after effect of it, and it's always they've either messed everybody's withholdings up too high or too low. Some years we have clients getting really big refunds. We start to see the trend. Clients are getting really big refunds. Oh, they didn't adjust the withholdings along with the tax brackets, and then or we'll see, like we saw a couple years ago, big deficits where people owed a lot of money. Yep. So how can they guard against that? Yeah,
so you just need to understand that you're going to see some differences in your paycheck, and you want to look at your pay stub, like how much are you having withheld in federal taxes, because every employer has a payroll software, something that's doing this payroll for you, that's telling you how much you should have withheld. So you're depending a lot on a behind-the-scenes calculation that is trying to determine how much federal withholdings you should have throughout the year. So don't rely that it's right, I guess.
Don't assume that number is correct.
Right. So, because most people assume that, well, it's a W-2 wage, I've had the withholdings on it throughout the year, so I should be good. In theory, yeah, you should be good. But it can be off, especially when the IRS tinkers with things and changes tax brackets. Sometimes it can take some time for those payroll withholding tables to kind of get caught up and start doing things correctly with your employer. We just see it a lot. So really the best thing to do is let a couple months go by, look at your pay stub, see how much is being withheld, and then make sure that is enough to cover your tax liability at the end of the year. The IRS has a really good tool on their website, a withholding calculator tool that you can go through.
It's a W-4 calculator, right? If they put that in Google, W-4 calculator,
yeah,
IRS,
that's true. It'll tell you how to fill out that W-4 and what you should put on it. So they try to help. There is a free software out there that the IRS gives, a tool there to help you understand what your withholdings need to be. And you can always give us a call. We're happy to look at your situation and make sure you're being adequately withheld throughout the year so that you're not getting a surprise tax bill.
Great. Really good information, Andrew, and I hope everybody is able to see some more money fall through to the bottom line out of their paycheck. Hopefully they see some savings. Awesome. So if you have any questions about your withholdings, definitely give us a call. We can put some estimates together for you, especially here late in the fourth quarter. We can help you understand whether or not you're going to be in a refund situation or hopefully not an amount due situation. But yeah, if you have any questions concerning that, just give us a call. We'll help you out. Thanks.